Welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic: can I have a solo 401k if I have a 1099 employee or multiple 1099 employees? So a solo 401k is only restricted when you have common law W-2 employees who are not owners in the business and work enough hours to be considered eligible. We'll talk about that more as we proceed. So that means that many business owners who think they may not qualify to open a solo 401k plan actually do. So the topic: can a business owner have a solo 401k with 1099 contractors? Let's clarify some of those misconceptions. So as always, this is your chance to get answers. Use the chat to ask questions on today's topic or anything else. Type them over now so that we can be sure to get to them all. Let's continue here. So, as a general rule, 1099 contractors do not impact your ability to open a solo 401k plan. As a matter of fact, if you are a contractor, you can even open your own separate solo 401k plan, because a solo 401k plan is for owner-only businesses. And if you're a 1099 contractor, then in the eyes of the IRS code, you are considered an owner employee and therefore self-employed, and as a result, you would be eligible to open a solo 401k plan. So that's one point of clarification for those who are looking to open a solo 401k plan this year before the end of the year. So whether you're an S corp, whether you're self-employed business as an S corp, you're a contractor, which means you're a sole proprietorship, your business is a C corporation, partnership, you do qualify to open a solo 401k plan as long as you don't employ any non-owner full-time W-2 employees in that business. So the context of an individual who's self-employed in their own S corporation, for example, you're obviously a W-2 employee in the business. The W-2 employee rule, which would make you not eligible to either open or continue with the solo 401k plan, deals with hiring someone who is not an owner in your business. So the person has to either, excuse me, so you have to run a test. One is, okay, is the individual that works for your business a W-2 employee? In which case, you then have to determine how many hours is that individual working. So if that individual is working 1,000 hours or more in your business and he or she is not an owner, then you would not qualify to open a solo 401k plan. If that individual is a contractor, on the other hand, for your S corporation, you can still open a solo 401k plan, because you can always exclude 1099 contractors from the solo 401k plan, regardless of how many hours they work. So that 1,000 hour requirement only applies to W-2 employees who are not owners in your business. Now, from the lens of someone who already has a solo 401k plan, so if your self-employed business is taxed as a partnership or S corporation, for example, and you already have a solo 401k plan, then you have to be aware of the ongoing requirements. So if you hire, let's talk about the full-time employee W-2 rule, and then we'll talk about the part-time employee rule. So there are two separate rules that apply when you already have a solo 401k plan. So the first one is the 1,000 hour requirement. So if you hire someone who's a W-2 employee, once that individual works 1,000 hours, then you would no longer qualify to continue with that solo 401k plan. So you would have to close that plan down. There are different options, such as converting it to a full-time traditional 401k, or closing the plan down and transferring it to an IRA, or taking a taxable distribution, which you generally do not want to do because of the taxes and possible penalties. And then there is the part-time employee rule. It's known as the Employee Qualifying Long-Term Part-Time Employee Rule, LPT. And the way that rule works is that if you hire a W-2 employee who works between 500 and 999 hours for 2 consecutive 12-month periods, then that would also result in you no longer qualifying to continue with that solo 401k plan. Now, whether it's the 1,000 hour rule or the 500 hour part-time employee rule, that computation period starts as soon as you hire that individual as a W-2 employee. So that's when that 12-month clock starts. And once that individual has satisfied that 12-month clock regarding the 1,000 hour full-time employee hours, as well as that 2 consecutive 500 to 999 hour 12-month consecutive window, then you have to offer that plan to that individual. So that's why, again, it would have to be converted to a full-time employer plan, or you can close the plan down and transfer it to an IRA. But if you want to continue with the plan, you would convert it to a full-time employer plan. Now, as far as the computation period, again, it starts on the date of hire and then ends once they've worked in that business for 12 months regarding the 1,000 hour requirement. For the part-time, that's the 500 for 2 consecutive 12-month periods. So it's important to be aware of those two 1,000 hour and 500 part-time rule once you have a solo 401k established. And here at my solo 401k financial, we'll shepherd our clients with that transition of that solo 401k plan, either to a full-time employer plan or to an IRA if they're transferring the plan out. We'll shepherd them through when they would need to close the plan down, and then we would also help them with reporting the closure of that plan with the government when applicable. Okay, so let's continue here. So we've covered this slide here already. Now, you again, besides excluding 1099 contractors from your business so that you can continue with the plan or open a solo 401k plan, you can always exclude anyone who's under age 21, even if that individual works full-time in your business, because you can always exclude anyone who's under age 21 from participating in a 401k, including a solo 401k, and that's its IRS statutory regulation. So that typically applies to all 401k plans out there, unless the trustee has decided to draft the plan differently, where they want to allow those who are under age 21, but not younger than age 18, to participate in the plan, in which case now you're going to have to make sure that individual is an owner and an employee in the business, because a solo 401k plan is for owner-only businesses. So let's talk about some myths out there. Hiring many 1099 contractors does not disqualify a solo 401k plan. So again, you can always exclude anyone who's a 1099 contractor from participating in the plan, and therefore you could either open a solo 401k plan or continue with the solo 401k plan if you already have one. So contractors, 1099 contractors, even if they work 1,000 hours or more, are never considered employees in your business. If you are a contractor, again, you can open your own solo 401k plan, of course. We've kind of covered this slide already regarding when you must convert that solo 401k plan to a full-time employer plan. So again, it has to do with if that individual is not an owner in the business, and if he or she is a W-2 employee who works 1,000 hours or more, or that long-term part-time employer rule regarding 500 to 999 hours for 2 consecutive 12-month periods. That would also make you not eligible to continue with the solo 401k plan. But you can open a solo 401k plan if you employ anyone who's a W-2 employee who works less than 1,000 hours. So you can certainly open a solo 401k plan. It's just that once you've opened that solo 401k plan, then you have to start applying both the 1,000 hour requirement and that 500 to 999 hour part-time employee regulation as well, which may result in having to close the plan out later on. All right, so with the solo 401k plan, you can always maximize contributions. That's one of the reasons the self-employed like to open solo 401k plans over other retirement accounts like a simple IRA and a SIP IRA. And we've performed webinars on the advantage of opening a solo 401k plan versus a SIP IRA. You can visit our YouTube channel to view past webinars as well as other topics. So if this information is helping you feel more confident about your future, please take a second to like and subscribe. It tells the platform that this content is valuable, which helps other solopreneurs like you to find it. Subscribing also guarantees that you receive notifications of all our crucial content that we deliver every day to help you secure your retirement. So the solo 401k is popular for many reasons, including maximizing contributions, because a solo 401k plan allows for various contribution types. You can make, for example, employee contributions, employer contributions, and voluntary after-tax solo 401k contributions as part of the mega backdoor Roth strategy. For instance, for tax year 2025, the overall contribution limit is $70,000 for someone who's under age 50. If you're age 50 or older, then you do qualify for an extra catch-up amount of $7,500, resulting in being able to contribute a total of $77,500 to the solo 401k plan for tax year 2025. And then there's the super catch-up contribution resulting from Secure Act 2.0, which applies to solo 401k owner-only employees who are age 60, 61, 62, or 63. They qualify for that super catch-up amount of $11,250. So no, you can't make both catch-ups. you would qualify for the $11,250 catch-up instead of the $7,500 catch-up if you fall within that age range, resulting in being able to contribute as much as $81,250 to the solo 401k plan for tax year 2025. And if you are married, both of you, meaning both spouses, can participate in the same solo 401k plan. As a result, you could really double up on contributions. So the business would be sponsored by that self-employed business. If both spouses work in the same business, they would have separate bank brokerage accounts known as holding accounts under that plan. So one plan with separate holding accounts for each participant, because a solo 401k is a defined contribution plan. As a result, the 401k rules require separate tracking of each participant's funds as well as fund sources, that is pre-tax, Roth, and voluntary after-tax. That's why this slide here shows a total of 6 brokerage accounts, which is 3 separate brokerage accounts or bank accounts for each spouse, for each source of funds, for a total of 6 holding accounts. And if both spouses have enough earned income from their self-employed business, each spouse can maximize that contribution to the solo 401k on an annual basis. So for example, those who are under age 50, for 2025, as I mentioned earlier, the overall contribution limit is $70,000, which means that if each spouse works for the business, they can each contribute $70,000 to the solo 401k plan, and the calculation for those contribution amounts would be based on each spouse's separate self-employment income under the business. So you can't piggyback off of each other's earned income from that self-employed business. You each have to have separate earned self-employment income under that business to support the contributions to the plan. So you can't contribute more than you make. So if you don't make enough earned income from self-employment activity, you may not be able to maximize the overall contribution limit to the plan. Also, both spouses are not required to contribute the same amount. One spouse may contribute to the plan in 1 year, the other spouse may not, or they both may contribute to the plan in 1 year, or they may choose not to contribute to the plan in any given year. So you're not required to make contributions to a solo 401k plan. The requirement is that you need to continue to perform self-employment activity, at least on a part-time basis. So material services, you have to continue to do work to continue with the plan. So those are some items to understand regarding the solo 401k from a contribution perspective. We've got a question here. So please go ahead and type over your questions as we're nearing the end of today's webinar. We will be back here in a few hours for our second daily session. So if you don't get a chance to ask your questions later, you can join us at 1 p.m. Pacific time for our second webinar. Let's take a look at some questions here. Do you recommend Fidelity or Schwab? Which one is preferred for opening the brokerage accounts? That's a very good question, and we get that question quite a bit. As a result, we've put together a page guide on our website that compares the two head to head. Let me share that with you here, and then I'll add a few comments to that. So take a look at this page here. So typically, Fidelity is a little more advantageous over Schwab with regards to holding the funds for the solo 401k plan offered by my solo 401k financial. So for those who don't know, obviously Schwab and Fidelity both offer their own solo 401k plan, but their solo 401k plan is oftentimes restricted in that it does not allow for the mega backdoor Roth strategy. It doesn't come with the $1,500 auto contribution credit, for example. It doesn't allow for loans, that is solo 401k participant loans, or even investment in alternative investments. But both Fidelity and Schwab do provide what they refer to as company non-prototype brokerage accounts for a solo 401k plan offered by my solo 401k financial. And that's probably why we're so popular on the retail side and also the institutional side. We have a lot of advisor clients that cleared through Fidelity and Schwab, and they utilize our services for their clients for their solo 401k, because the funds can be held at Fidelity or Schwab, but the plan is through my solo 401k financial, and we're the ones that provide that solo 401k plan with all the bells and whistles. And we'll draft the Fidelity and Schwab brokerage forms for those that want to use Schwab or Fidelity to hold the funds for the plan that we offer. Now, typically, individuals prefer Fidelity over Schwab for one main reason, and it's from a contribution perspective. With Fidelity, you're going to be able to link your business bank account to your Fidelity brokerage accounts for making contributions. Whereas with Schwab, they don't allow you to link your business bank account to your Schwab brokerage accounts for making contributions. I'm hoping that eventually they'll change that procedure, but that's a Schwab procedure. So individuals don't want to deal with having to mail a check to Schwab each time they want to make a contribution or having to drive to their local branch. So for that reason, individuals prefer Fidelity for the brokerage accounts because they'll be able to link their business bank account to those Fidelity brokerage accounts so that they can make contributions electronically. The linking of those brokerage accounts will be done on the business bank account side. So you'll need your new Fidelity brokerage account numbers as well as Fidelity's routing number. And then you'll be able to plug that information into your business bank account. And then you'll be able to connect that business bank account to those respective Fidelity brokerage accounts for making those contributions electronically. With Schwab, you can't link from an external bank account. One way around that with Schwab, however, is you can open up a business brokerage account at Schwab and then link that business brokerage account to those Schwab brokerage accounts, and that's a way to make contributions electronically. So again, take a look at that link I just shared to you, where we put together a comparison of using Schwab versus Fidelity for the what they refer to as non-prototype / company brokerage accounts that they provide for a solo 401k offered by my solo 401k financial. So a good question. Let's see here. Another question here. Thank you for the webinar. Great information. Oh, you're welcome. We put these on every day, so we appreciate you saying thank you. And please subscribe to our channel, as I mentioned earlier, as it helps to get the word out to other solopreneurs out there, and it helps us to grow this community. We have over 1,000 videos that we've put on, and they're on our YouTube channel, so we're very active from an educational perspective. So your question for pre-tax retirement accounts, do you typically convert those into Roth Solo 401k upon Roth Solo 401k creation? Or is it cleaner to just move them into a pre-tax Solo 401k and then slowly convert into Roth Solo 401k in accordance with tax advantages over years? That's a great question. And we've actually performed a webinar on this topic regarding when you should convert pre-tax solo 401k funds to the Roth Solo 401k. And some things from a planning perspective is individuals like to convert pre-tax funds, solo 401k funds, to the Roth Solo 401k generally in years that they're going to be in a lower tax bracket. Also, let's say that they invested in some equities that are not performing very well. Let's say the market took a nosedive. Let's say you invested in, let's say, NVIDIA. That's a popular stock, or even Amazon. And let's say both of those stocks had a tremendous drop in value, and that's held in your pre-tax solo 401k. You could actually convert that NVIDIA stock or that Amazon stock holding from the pre-tax solo 401k to the Roth solo 401k when it's at a low value, and you would pay taxes on that lower value. And then once inside the Roth solo 401k, if those stocks shoot up, all those gains will grow tax-free in your Roth solo 401k. So yes, you can convert actual funds, but you can also convert stock holdings or even real estate. Many of our clients utilize their solo 401k to invest in real estate. So if that property uh, has a market correction, if the property drops in value, you can convert that property to the Roth solo 401k from the pre-tax solo 401k, and you would pay taxes on that lower market value, and then all the gains from that property, if it goes back up in value, along with all the rental income, would flow to that Roth solo 401k and grow tax-free. So really, it's important to understand that when you make a pre-tax solo 401k contribution, you get a tax deduction for the year. Whereas if you make it as a Roth solo 401k contribution, you don't get a tax deduction for the year. But the trade-off is that it grows tax-free. So from a conversion perspective, you want to think about that, because anytime you convert funds or assets in a pre-tax solo 401k, it's going to be a taxable event, which means it's going to be subject to income taxes, which may result in bumping you into a higher tax bracket. So oftentimes, if you speak to a financial advisor out there or a tax professional, they may advise you to convert when you're in a lower tax bracket, or if you're converting an investment when that investment is low in value, so it has dropped in value. Hopefully that answers your question. Okay, let's see if we have some more questions here. Here's another question here. Would you recommend forming an LLC before creating the solo 401k? I'm a sole proprietor and do not have an LLC. Any advantage or disadvantage? I plan on investing in real estate from the solo 401k. Good question. And um, number one, you're not required to have an LLC or an S corporation to open a solo 401k plan. From a solo 401k eligibility perspective, you need to be self-employed, which means you need to be performing material services. You got to be doing the work. So investment income, capital gains income, passive income does not count as self-employment income for solo 401k eligibility reasons. And you can open a solo 401k if you're a contractor. Let's say you're a handyman, or you're doing you drive you're doing contracting work, and therefore you get a 1099 NEC, which means you file Schedule C. That means you're self-employed, so the plan would be opened up under your name. So just from a solo 401k eligibility perspective, it's not the entity type that determines whether or not you qualify to open a solo 401k plan. It's the actual underlying activity, meaning you have to be doing the work, active work, but you have to be performing material services. Now, from an investment perspective, an LLC is also not required. There's what's referred to as a checkbook IRA, aka IRA LLC. Well, with the solo 401k plan, it's oftentimes referred to as a checkbook solo 401k when comparing it to a IRA LLC / checkbook IRA, because unlike a self-directed IRA, in order to gain full control over your self-directed IRA, you have to utilize an IRA LLC. With the solo 401k, you're the trustee of the plan. So it comes with checkbook control, meaning that you can make investments by writing a check or by wire, especially if we're talking about real estate. So for that reason, most individuals do not utilize an LLC with the solo 401k from an investment perspective. Now, we do offer the LLC for the solo 401k if you want to invest through an LLC, which would be referred to, I guess, as a solo 401k LLC, where you would invest the solo 401k in a single member LLC, meaning the sole member is the solo 401k. That LLC will now make the investment in real estate. So title to the property is taken in the name of the LLC as opposed to the solo 401k, as opposed to taking title in the name of the solo 401k. But again, I find that the majority of solo 401k participants invest the solo 401k plan directly in real estate, where the solo 401k takes title to the property. So we do offer that solo 401k LLC service as well. But again, it's not a requirement. Let's see here. Here's another comment. Let's assume that I'll open a solo 401k. If I need request rollover Fidelity solo 401k after tax to personal Schwab Roth IRA, please walk the steps to make this happen. So if you want to, let me share a link from our website, actually, the procedure. Give me a moment here. Looks like you're asking about converting a voluntary after-tax solo 401k contribution to your Schwab Roth IRA. Give me a moment here while I dig this up from our website. You can actually visit our website and we have a search box where you can type in keywords and it'll display all kinds of information. For example, I just typed in convert Fidelity on that search box on our website. Give me a moment here. So we have one here for converting to a Roth IRA at Vanguard. I know you want to go to a Roth IRA at Schwab, but it's very similar. So you would make the voluntary after-tax contribution to the voluntary after-tax solo 401k holding account. So this bucket right here. And then you would convert that over to the Roth IRA at Schwab. So you have the choice to convert it to the Roth Solo 401k or to a Roth IRA at Schwab. So what you would do is you would fill out one of Fidelity's forms where you would direct Fidelity to wire those funds directly to Schwab. And we have that form on our website that we can share with you. And once those funds are wired from that voluntary after-tax solo 401k to the Roth IRA at Schwab, you would then complete our online conversion form because we would need to collect the information to issue the form 1099-R to the IRS. The form 1099-R applies anytime you convert voluntary after-tax solo 401k funds to the Roth IRA or to the Roth Solo 401k. It also applies, of course, to pre-tax conversions. So you would fill out that conversion form and then we would issue the form 1099-R to you and a copy to the IRS. So good question. All right. Looks like we've come to the end of our session. We appreciate you joining today's webinar. If we didn't get to any of your questions now, no worries at all because we'll be live again here in a couple of hours. And again, we also go live every day, typically at 10 a.m. Pacific time, and then oftentimes a second time at 1 p.m. Pacific time. So we're very active in the space from an educational perspective. Will this video be posted online? Yes, it will be posted online. We post all our videos online on our YouTube channel. Here's the YouTube channel there. You can also visit our My Community where we have over 30,000 members. You can even post forums if you're a financial advisor, CPA, attorney, real estate agent, financial professional, insurance agent, any professional. You can even post guest blog posts on our community and link it back to your company's website so that the 30,000 plus eyeballs in our community can view your services. Okay, well, that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so that we can keep building this community. Till next time, have a good rest of the day.